Good morning. Today is May 9th. And to my little friends, yesterday I said it was April 8th, but today is May 9th. Somebody, one of the listeners, caught it. Well, Republicans in Congress are trying to find a way to move the Trump agenda forward. The debate's been whether to have one beautiful bill or to split it up into two bills. Because of a quirk in the budget rules, they will have two bites at the apple and pass two bills under reconciliation. This is important because bills passed under this process only need a simple majority and are not subject to a filibuster by Democrats. No matter which method they choose, they're going to have to formulate a tax bill. Proponents of a single bill point out it will give business clarity on their tax situation and they can invest in growth. And I favor this approach so that we can get the economy moving quicker. Certainly, Congress will be renewing certain parts of the Tax Cut and Jobs Act of 2017. I worked on that bill on behalf of clients back then, and my former boss, Senator Orrin Hatch, was the chairman of the Senate Finance Committee at the time. The 2017 reform offered incentives for investment in new businesses by allowing them to expense the cost of assets rather than writing them off over time. But these benefits were set to be phased out between 2023 to 2026, removing a key growth element of the earlier law. This was a major change in tax laws that applies to business expansion, and it worked wonderfully. It needs to be renewed and made permanent. There's another side of the tax debate that has Republicans divided. Back in 2017, the top marginal rate was reduced from 39.6% to 37%. Basically, what that bill did was give everybody a 10% reduction in their tax bracket. And at the time, I debated this with Senator Hatch. Today, it only affects taxable income above $751,601 for a married couple filing a joint return. That's not a lot of people. The additional 2.6% of tax above that amount would only be, again, above the threshold. In 2017, the Democrats pounced on this reduction and made it a major talking point. They only talked about how many dollars the, quote, wealthy would save and never mentioned how many dollars they were paying. Anyone who follows the tax code closely understands that these high-income people pay the overwhelming majority of the federal income tax burden. This debate on the top rate is once again being discussed. This time, President Trump is urging Republicans to allow that top rate to go back to 39.6%. At the same time, it will allow the tax cuts enacted in 2017 for the lower brackets to be extended. And it's been reported that Trump has asked Speaker Johnson to back this proposal, but so far, Johnson's remained non-committal on the subject. In this debate, some Republicans have expressed interest in raising taxes on the most wealthy in our society, but the conservative wing of the party is adamant that they will not raise any taxes. That puts this debate on a collision course, and something will have to be worked out in the next few weeks if there's going to be a bill produced by the July 4th recess. Trump has fine-tuned his request in allowing the top rate to come back. He would only have it apply to incomes over $2.5 million for single filers and $5 million for joint filers. That's even fewer people. Well, that reduced the number of tax filers that would apply, but under this plan, the White House believes it would help pay for the middle and working class tax cuts and protect Medicaid as well. I'm not sure there's enough dollars in that to do that. In my opinion, as someone who's worked on every major tax bill from 1980 to 2019, I think there's a compromise somewhere in this debate. I definitely support allowing the top rate to go back to the 2017 level of 39.6%, but the question is the threshold. Perhaps we allow the rate to apply to taxable income over $1 million for joint filers. The far-right Republican caucus will scream about this, but they're not looking at the facts or the benefits that can accrue to making this change. If we allow the top rate to return to 39.6, it will give the Republicans and the president some wiggle room within the bill. There'll be an increase in revenue, and if applied correctly, could benefit just about every Republican running for election in the midterms, and would eviscerate the Democrats' talking point about a tax bill that benefited the rich and powerful. It would be Republicans raising taxes on this group. Now, there are several options that can be used to utilize the increased revenue. I've spoken to them in the past, but I would list them again here today. First, it would allow Republicans to increase the standard deduction for married couples. This year it would be $30,000. They could increase it to $32,000 or $33,000. That would affect about 90% of the people filing income taxes, since they don't itemize on a Schedule A. They use the short form and take the standard deduction. They could increase the state and local tax deduction from its current $10,000 cap to $20,000. In the past decade, this cap has affected a lot more people due to inflation and the rapid increase in the worth of housing. It's now affecting people in red states, not just the blue states with high taxes. I would also give the Republicans from these blue states a win and help them in their elections. The third option would be to simply take the increased revenue and apply it to the deficit and the national debt. Knowing politicians like I do, would be this option probably has the least chance of happening. They'll find ways to spend the money. Whatever they do, Republicans are going to have to come up with a plan they can all agree on in the House of Representatives. They don't have enough of a majority to have members oppose it and then refuse to vote for the bill. This has been To My Liberal Friends. Thanks for listening.